Bitcoin is moving into a new zone. Today we'll be breaking down why and where is it going to stop, or are we on cue for maybe an all-time high? We'll take a look at all that good stuff today. My name is Paul Barrow. Welcome back into Tech Path. Before we get started, thank our sponsor, and that is iTrust Capital. Getting into an IRA for crypto. This is one of the ways you can do it. All you have to do is visit itrustcapital.com. Make sure and use our link because we have a $100 funding reward if you decide to go this direction. You can trade Bitcoin, ETH, precious metals, and a lot of altcoins over there, all within your iTrust account. So just check it out, see what you guys think, and let us know. Let's get into a couple of points here. I want to start off with the S&P 500, 5,000, very close to a milestone. And this, of course, has started to spark a little bit of a surge in crypto assets. Some of the things to kind of note here. Surge in Bitcoin's price now are 46, actually hit 47 this morning. S&P reached an unprecedented 5,000 points. This is a psychological milestone. I would agree, but there's just been so many earnings positives that have come in here this week, Roblox, Meta, etc., really performing well. And I think tech continues to be one of the key drivers here. Analysts point to indicators such as inflows, 9 consecutive days also on lower outflows from Grayscale. That's a big factor. Supporting factors for the positive momentum, meaning people are saying, okay, these guys are continuing to see the amount of growth that we kind of thought was coming for traditional finance, but I think even traditional finance might be a little bit surprised at this. This translates to a staggering additional nearly 8.5 trillion in market cap within just the first 3 months. This is a big news, I think, going forward for sure. Other things that I want to hit on today, and we'll be getting into, is a little bit here on where the chart might go, because some people are eyeing that 50K mark as being a very critical point of where Bitcoin could be. So shorts need to kind of get ready for this, according to this analyst. There's a couple of points to kind of look at right here. Let me zoom in on that. At the time of writing, 47.4 formed a focus as volatility remained, with Bitcoin still sizing up its highest level since late 2021. It's a big deal that we've seen this kind of movement. And I'll show you some things on the chart here in a second that will give you kind of an alignment of where maybe this starts to move. Strong bounce from mid-range, attacking 48,000. And of course, the last hurdle for Bitcoin to overcome, not much standing in its way if it does clear around 50K. So a couple of points we'll show on a chart here in a minute, but you can kind of see some of the scenarios that are playing out here. Now, order blocks are and have been kind of that layer of resistance that we've watched. And if you jump over to the Bitcoin chart, right here, we're using Lux Algos, their price action, a little bit here on their indice. And you can kind of see where and what we're into right here, which is 1, 2, 3, 4 days on this daily close, with Bitcoin continuing to hold at around 48,000, which has been in and out today. And of course, remember, this is the local high and definitely moving into a zone. We are in that zone right now of potential, some issues around shorts being at risk. So you got to be careful. If this does break, this will be the key in Bitcoin going to the next level, which means what's going to stand in its new, breaking its last all-time high at 69K. So this could be a very interesting week coming up. And remember, there's a lot of points behind all of this. So most of it has been with the ETFs. And here's what I mean by that, because there's some things also that, when we look at the sentiment data, that has been brewing over this last week. And I think there has been a little bit of complacency once the Bitcoin ETF started versus to where we are now. And what I mean by that is people thought, well, yeah, the Bitcoin, it's kind of a sell the news thing. And then they realized what was happening. And to give an example, 15% of Bitcoin spot trading right now are ETFs. This is huge. US spot Bitcoin ETFs now account for 10 to 15% of the total Bitcoin spot trading volume across centralized exchanges globally. Spot ETFs also hold around 650,000 Bitcoin, or 3% of Bitcoin supply. This is something we talked about earlier in the week. Other things, Coinbase analysts say there have been more important crypto themes merging, have not. And when you look at the inclusion of a rising DeFi activity, which I think is the bigger factor here, this could mean a lot of value coming in for Ethereum, along with many other assets. Remember, an Ethereum ETF, definitely on the wings. I think we do see this coming in May. 58% of total DeFi value remains locked in Ethereum. And they, of course, in this article, we think Bitcoin halving in April may negatively affect the economics around mining, potentially increasing the sell pressure on miners. That would be the only problem But is there a shift for that? Of course, we all have heard the HUD 8 news. That's a factor, I think, that plays into this. But mining Bitcoin is going to become very, very difficult. So it'll be interesting to see how this plays. But all at that same time, we've seen, Marathon and Riot start to really double down on investment in mining. Further into this right here, BlackRock, Fidelity now hold 150,000, almost 152,000 Bitcoin, worth over 7.1 billion for spot Bitcoin ETFs. That's crazy. Those numbers are just crazy. And then if you look at the history of ETFs in, overall, BlackRock and Fidelity have become pretty much the talk of the town. I think this is the thing that everybody's paying attention to in Wall Street, is they're watching the amount of gains that are happening in a market that has really been pent up by demand from mainstream. Remember, the next real move for all of digital assets is going to come from mainstream adoption. A couple of points they hit on right here. BlackRock and Fidelity's ETFs took first and second place respectively, attracting $6 billion in funds since their launch. And if you look at the listing here, I mean, these are astronomical numbers. And I think we are just seeing the beginning of the locomotive coming in. All right, so further in this article, it means two of these have comfortably flipped all opposition from more stalwart ETFs like Invesco's QQQ or Triple Q, which holds shares in the top 9 public financial traded companies. And then the NASDAQ 100, also which lists include like Apple, Google, Microsoft, Tesla, etc. So you can tell the performance is there, meaning Main Street and a lot of financial advisors are now starting to see the pressure of what real exposure to Bitcoin is. So imagine what they're thinking. They're thinking, what is next? What is the next opportunity here? Well, it's going to be Ethereum. So, everybody's been looking at this, and I talked to a lot of people who have not invested in any kind of digital asset ever, but now they're talking about it just because of what's happening with the ETF. It's hitting the news, but more importantly, it's hitting all of these financial managers. These financial managers really for the first time are talking about this, and they're already starting to say, this is just the beginning, guys. We have other products that are coming that will start to make their way in that could be even better. And if you look at that right now, only 4 of the US hedge funds have beat DeFi in terms of assets under management. So Wall Street is watching this like an eagle in terms of where that liquidity may come from. Further in the article, here it is right here. The total value locked in all DeFi protocols reached a multi-year 65 billion. Notably, this time's decentralized saw numbers, and TVL was just last of June. Further in this, TVL accounts for 48% of stablecoins market cap, 136 billion at the time of pub. And then the total value locked measures of non-liquid invested DeFi versus in traditional finance. This would be equivalent to the assets under management, kind of the same thing that BlackRock and others are kind of faced with. Simply put, DeFi is where it's at right now. Wall Street understands that. This is a big opportunity. They see it coming down the pipe. And I think some of the ones that really see it are ones like Franklin Templeton. I'll talk to you about that in a minute and why they are looking ahead and kind of down the line for additional digital assets. BlackRock says Bitcoin creates global internet value, allows assets to move low cost, near real-time cross borders. They get it. I think everyone in Wall Street, these are old, kind of old talking points. But the point is that they're redelivering on it. Now, what's interesting here is that Franklin Templeton dropped their laser eyes. Bitcoin approval happens. It's a month old. Laser eyes gone. What are they doing? They're looking into other things. So picture replaced with an abstract yellow-red green pattern, hello progress, which was used in a previous marketing campaign. You can kind of see it right there. And pretty interesting. The change doesn't mean the company isn't still bullish on Bitcoin, but I think what they're doing is they're prepping for opportunities in Ethereum and on other digital assets that are coming to Wall Street. Here was another tweet by Franklin Templeton. We believe as blockchains improve in fees, keyword here, fees, that's Ethereum, and performance, the potential use cases that are unlocked grow exponentially, improving economies and experience end user cannot be overstated. So, meaning they're all in. This is it. And whether you're looking at things like Solana or Avalanche, which I think is probably going to be the play more importantly with Wall Street, especially around real-world assets going forward. Last tweet right here, other L1s outside of Bitcoin ETH Sol have massive potentials. and are continuing to gain support. So monitor and develop these networks as they grow and mature. Avalanche, along with, there's a handful of other L1s that are coming fast. So all of which are really showing the trend. If you look at our own sentiment data, really trending all the way back here into the 25th of January, which was around 56.93, and it has been slowly moving up the chart here. So Bitcoin has been holding on this uptrend really since back here in January. So a good solid number here in terms of sentiment going forward. So if it continues to spread out on this, I'm looking for a little bit of a pivot here on amplification, but this also tells me that we may be looking for a retracement off this 50K. So that's what I'm watching right now, is this little departure right here. Very overheated sentiment on the upside. So keep an eye on that. Be careful as you guys are trading out there. So if you're not part of the Diamond Circle, make sure and jump in. It's one of the easiest places to get additional content and also more research. We drop research over there that we don't do here on the show. And all you have to do is click the link down there. Catch me on X @PaulBaron. Catch you next time right here on TechPath.